Hey everybody out there, it's Peter aka Joseph Von Schmidt with Stock Market 101. Today I want to go over something that's called an ETF. Again, remember we're taking things slow and we're going to people who are getting acclimated to the stock market. An ETF, very well known as exchange trade fund. An ETF is a fund that actually has many different types of commodities or a certain sector, or you could have certain things in it for example, it could have Tesla, Virgin Galactic, and so forth and so on, those type of things in it, technologies or commodities. It could have, Coca-Cola in it, as well as tobacco, alcohol, any types of these things. You can have an ETF. What an ETF is a fund that is traded on the stock market, and it actually goes up and down. It fluctuates with stocks, but it's actually a bit safer because if you have an ETF, you have certain funds or different funds inside of it that are working together. I mean, now could you have a completely off day and all your funds down and your ETF are down? Of course. The stock market is definitely volatile, especially now in these days. You see a lot of things happening. Oh, sorry. By the way, take a look around. I'm not inside. I actually like getting outside and have a great day. So forgive me if you hear some birds in the background or some airplanes flying over. I just really wanted to take the time to enjoy this day out here, as well as share a little bit of knowledge. So ETFs, I like ETFs. I actually have a few ETFs myself in my portfolio. It actually just helps me to be in a certain sector with a lot less risk. I have Tesla in one of my ETFs, and I have Virgin Galactic in one of my ETFs, and it just a safe way to hold a bunch of different companies without a ton of risk. The other upside to ETF too is that it's more liquid than a mutual fund. I'm not going to get this too muddy with mutual funds. Mutual funds are a little bit different, but ETFs also are traded, daily in the stock market. That's why the prices go up and down. Unlike a mutual fund will be traded once a day at the end of the market, and so it's not going to flex too much. With that being said, ETFs too you're able to have more liquidity when you have an ETF, which means that you can sell them throughout the day. If you're in a bind and you need to make your assets more liquid, you can get your funds, you can move them. Their return is usually pretty good. It varies, but I would say somewhere between 6 and 7% is going to be something on average. Like I said, I'm just kind of giving a base here. I'm not a financial advisor. I'm not telling you to buy ETFs. I'm just telling you what an ETF is, how it could benefit you, what you're looking to do with your current portfolio. And again, I'm trying to keep these videos short, so I'm not trying to overload people with too much information to make your head go. But so I'm just trying to get you new to the stock market, acclimated to terms and what kind of investments there are out there. You're going to have to make a decision. As I was talking to one of my friends the other day, you're going to have to make a decision on what kind of portfolio you want. What is your long-term goal, your short-term goal? What is your financial goals to achieve? ETFs are a good way to reach a financial goal that is somewhat conservative, that is going to be long-term. And those are things that you're going to have to figure out for yourself. Again, this is just information. This is not telling you. I know I mentioned Virgin Galactic and Tesla today. I'm not by any means telling you anyone out there to buy those companies. If you like those companies, you do your research on them, and you make the decision yourself. But again, for me, I'm trying to just teach by example, teach what I know. And so I do like ETFs. They're part of my portfolio. They're probably, I would say, somewhere around 15% of what I have in my portfolio, which I like. And it's just like, for me, I'm more of a conservative investor. So I will take risks when I need to, and but I will more stay on the conservative side when I need to. It just depends on what I'm trying to achieve. You know, we have to understand that nothing is in a vacuum. Like, everyone can lay down something in a vacuum to us, what this looks like, what this is going to do, what that's going to do. But we have to understand each and every day there's mitigating circumstances that are all around what we are doing, what we're trying to accomplish. So we have to understand that day by day by day. So I couldn't just come out here, and no financial person out there, I can tell you straight up what's going to happen and 10 years from now, even tomorrow. So just making your own decision. Again, what we're going over, ETF, exchange trade funds, are funds that are have a whole lot of commodities or sector or industry asset, whatever it may be, in one fund. So you can buy it as a stock, but you're buying multiple companies, multiple assets, multiple things, which will actually in turn be a lot safer of an investment, because not always is just a whole sector going to tank on the same day, or a whole sector isn't going to rise on the same day. I mean, it's rare, it can happen, but it doesn't usually happen, and that's why ETFs are safe. And again, I'm not a financial advisor, but my portfolio personally has about 15% of ETFs in them. And so I hope this helps. Peter again, Diamond Handed Apes on Facebook at Stock Market 101. And if you like this video, please share it, subscribe, send it to your friends. That really will help me to continue to do something that I really love, which is educate and bless people with knowledge that I have. And I hope you really enjoyed this video. All right, and we'll go over mutual funds and other things down the road. All right, until then, talk to you later. Bye.